Good day, investors. In this video, we will take a closer look at D-Wave Quantum, ticker symbol QBTS. This company is one of the most interesting and speculative quantum computing companies in the market right now, and could potentially become a major player in the future of quantum computing and optimization technology. The company also recently released its Q1 earnings results, and overall they were very interesting with several major commercial and technology announcements, including new enterprise agreements, system sales, and continued progress in both annealing and gate model quantum computing. So in this video, we will look at the earnings numbers and fundamentals for the company. Then we will look at the long-term growth potential and valuation. And finally, I will give you my personal take on whether D-Wave stock looks like a good investment opportunity right now. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. Thank you very much. Now let's start with the financial highlights for Q1. And we can see the company reported some very strong growth figures across several key metrics here. Starting with bookings, Q1 bookings increased from around $1.6 million last year to approximately $33.4 million this quarter, which is an absolutely massive increase year over year. Remaining performance obligations also increased significantly, rising from about $6.4 million to roughly $42.4 million, which is important because this gives us a better view of future contracted revenue. Commercial revenue also continued growing, increasing nearly 40% year over year to around $2.1 million, while QCaaS revenue and professional services revenue also moved higher compared to last year. And one of the biggest positives here is the liquidity position, because D-Wave ended the quarter with approximately $588 million in liquidity compared to around $304 million 1 year ago, which gives the company a much stronger balance sheet and more flexibility to continue investing into growth and quantum technology development. So overall, while revenue is still relatively small compared to the company's valuation, the bigger story here is clearly the rapid growth in bookings, commercial traction, and the expanding pipeline of enterprise quantum computing agreements. Now moving on from the financial highlights. D-Wave has actually had a very active year so far. The company announced a $20 million system agreement with Florida Atlantic University, a $10 million QCaaS agreement with a Fortune 100 company, new quantum AI developer tools, and continued progress with its Advantage 2 platform. And overall, these announcements show that D-Wave is continuing to push both commercial adoption and technology development at the same time, which is important because investors mainly want to see real customers, real enterprise applications, and continued technology progress. But one of the biggest things that separates D-Wave from many other quantum companies is its unique technology approach. Unlike companies like IonQ and Rigetti, D-Wave focuses heavily on annealing quantum computing, which is designed specifically for optimization problems like logistics, manufacturing, scheduling, supply chains, and AI optimization workloads. And according to the company, D-Wave now has over 100 customers, more than 30 enterprise use cases, and commercial applications already running in production. The company also generates revenue through QCaaS, professional services, and direct system sales. So overall, D-Wave appears much more focused on commercial enterprise adoption today rather than purely long-term research projects. And this leads into one of the biggest bullish arguments for the stock, which is that D-Wave believes its systems can already solve useful real-world problems today. According to the company, D-Wave has already demonstrated quantum supremacy on a real-world problem, specifically involving magnetic materials simulation. And unlike some other quantum demonstrations, D-Wave argues this was tied to a practical, real-world application rather than just a theoretical test. According to the company, their Advantage 2 prototype completed the computation in minutes while consuming less than $1 of electricity, while classical supercomputers could have potentially taken an extremely long time to solve the same problem. Now, of course, quantum computing is still a very early and highly debated industry, but if D-Wave can continue proving real-world advantages in optimization workloads, That could become a major competitive advantage going forward. And when we look at enterprise applications, this is where the D-Wave story becomes more interesting. The company is already working on applications across manufacturing, logistics, telecommunications, drug discovery, and optimization. For example, D-Wave highlighted faster scheduling, better manufacturing efficiency, mobile network optimization, and drug discovery applications. So overall, the company is actively trying to commercialize these systems today rather than focusing only on research. And another major long-term opportunity here is quantum AI. D-Wave is now combining quantum computing with AI and machine learning, including quantum hybrid transformer models, quantum diffusion models, and AI optimization systems. So overall, D-Wave is positioning itself at the intersection of quantum computing, AI, and enterprise optimization workloads. And another very interesting part of the long-term story here is D-Wave's Advantage 3 roadmap. The company is now working toward a 100,000 qubit annealing quantum computer, which would represent a massive increase in scale compared to today's systems. According to management, the roadmap includes advanced 3D chip packaging, superconducting interconnects, and scalable control systems designed to support much larger quantum processors. And honestly, scalability is one of the biggest challenges across the entire quantum computing industry right now. So if D-Wave can successfully continue scaling its systems, that could become a major long-term competitive advantage for the company. And when looking at the long-term opportunity, this is where the potential market size becomes very large. According to D-Wave, the near-term quantum computing market over the next 3 to 5 years could represent around $2 to $5 billion in total market opportunity, while the midterm opportunity over the next 5 to 15 years could potentially grow toward $25 to $50 billion. And over the very long term, D-Wave believes the overall quantum computing market could eventually reach around $450 to $850 billion across areas like optimization, machine learning, cryptography, simulation, and AI workloads. And what's interesting here is that D-Wave believes its dual platform strategy gives the company exposure to both near-term optimization markets through annealing and longer-term gate model quantum opportunities. So this shows that management is trying to position D-Wave across multiple future areas of quantum computing rather than relying on only one technology approach. So after looking at the fundamentals and long-term growth opportunity, let's now take a look at the valuation and analyst expectations for the stock. According to stock analysis data, analysts currently have a consensus strong buy rating on D-Wave stock, with an average price target of around $32.53, which implies potential upside of roughly 53% from current levels. Analyst targets currently range from around $12 on the low end to approximately $45 on the high end, indicating potential upside of more than 110% on the high side. So clearly, expectations for the stock remain very bullish, but at the same time, the very wide range between analyst targets also shows just how speculative and uncertain the quantum computing industry still is right now. And when we look at the stock performance, we can get a better view of the current setup for the stock. As you can see here, D-Wave stock is currently trading around $21 per share, giving the company a market cap of roughly $7.8 billion. The stock has been extremely volatile over the past year, at one point rallying above $45 per share before pulling back significantly. Even after the recent volatility, however, the stock is still up around 90% over the past 12 months. At the same time, the company is still generating relatively small revenue today and remains unprofitable, which means this stock is still trading primarily on future growth expectations rather than current financial fundamentals. So when we bring everything together, D-Wave's Q1 was bullish in my opinion, but this is still a very speculative stock. Revenue itself was relatively weak this quarter due to the timing of large system sales. But the much bigger story was record bookings, massive backlog growth, and growing demand for D-Wave systems and enterprise agreements. The company is also trying to position itself as one of the most commercially advanced quantum computing companies today, especially because its annealing systems are already being used by customers. The company now has both annealing and gate model exposure, and management continues pushing into areas like AI optimization, blockchain, and enterprise quantum applications. At the same time, however, this is still a very high-risk investment. Revenue remains relatively small, the company is still unprofitable, and the valuation depends heavily on future quantum computing adoption. So in my opinion, D-Wave looks very interesting from a long-term technology and commercial momentum perspective. But investors also need to understand that this stock is still trading primarily on future potential rather than current financial fundamentals. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming investing videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching and happy investing.